Hello and welcome to the Small Business Briefing. I'm Brian Calley, CEO of the Small Business Association of Michigan.
Good afternoon. Thanks for joining us today. I'm Sarah Miller, Vice President of Marketing and Strategic Communications at SBAM. I'd like to welcome one of our new members, Tri-Bowl LLC, DBA Perfect Game. They're located in Farmington Hills, so welcome to their team. Of course, we're welcoming our new member on behalf of our sponsor, Consumers Credit Union. Did you know that Consumers offers terms up to 20 years with no balloon payments on real estate business loans? You can learn more at consumerscu.org. All right, so the latest inflation numbers were recently released, and it was kind of a disappointing report for January. Brian, what can you tell us?
Yeah, so if you watch your stock portfolio, you saw at the end of last week, the market kind of tanked, and it's mainly was because of the inflation report that came out and showed that while there had been a somewhat downward trend, although it seemed like it came down and was kind of flattening out at an uncomfortably high level, inflation went up in January as compared to December. Now it's just 1 month, but there was a lot of disappointment, and I'd say even surprise over that it had gone up. So just running over the numbers, the headline inflation, like the top line numbers and the consumer price index, 5.4%, and that's as compared to the year before. In December, it was up 5.3% compared to the year before. So it's a little different than what was anticipated, but what was more problematic than that. So that was the headline inflation. But what was more disappointing was looking at the core inflation. So taking out the more volatile commodities that can drive inflation up or down quickly. If you take that out, that core came in at 4.7%. And that was 0.6% higher than December. So like the headline inflation, the overall inflation with all the volatile commodities in it was up just 0.1%, but the core inflation, the one that's harder to move, up 0.6. And that was a pretty big disappointment. If you look at the monthly numbers too, in terms of just the month by month, I was comparing, December compared to a December earlier, January compared to January earlier. But if you look at just the monthly numbers, you'll see that prices were up 0.6 over the previous month in January compared to December. December was up 0.2 compared to November. So December really looked like it was coming down. January, it came back. So it was a disappointment, and for me, actually a bit of a surprise. There's always market expectations for these, and Wall Street puts out these estimates, and so the estimates are usually off by a little bit, but in this case, it was they were off by the wrong way, and off by an amount that was a little surprising. So just have to roll with it. It's getting inflation back down after it's kind of been sticky for a while, after labor costs are also worked in, kind of baked into these numbers, especially in services. The overall goods inflation has been coming down. Service inflation has been going up. Not a surprise it being most services being very labor intensive.
All right, let's talk a little bit about what's going to happen here in Lansing this week. The legislature is going to be back in session after a couple of weeks with some unexpected days off. So they're geared up to move on some stuff. What is the scoop there?
Yeah, so it has been a little while since we've seen some serious action in the legislature. Last week, the ice storms had canceled things, and then the tragic shooting at Michigan State the week before had cut that week short. So the things that I expect to come up this week, assuming there's no other interruptions to the session schedule, Elliott Larson is something we expect to come up. This is the state's civil rights law, and it bans discrimination on the basis of a bunch of different things, and for employment and in housing. So there's the two main areas of society where it covers employment and housing. no discrimination based on things like religion, nationality, sex, marital status. There has been an effort over time to expand that to include gender expression and gender identity and sexual preference, and that was actually done essentially by the court last year. So we talked about that. The Michigan Supreme Court had said discrimination on the basis of sex already includes those things, and so I do expect there'll be a law that makes its way through the process, and very quickly will hit the governor's desk, and she will sign it to essentially codify that Supreme Court decision into law. I expect that will really start moving through and actually they've already done committee hearings before, but really I think we'll move much quicker through the process now. We talked late last week about that tax issue, the income tax issue. So there's a bill that has a bunch of changes to the income tax bill, to Income Tax Act of 1967. I think one way or another that's going to get resolved this week. Either they'll get immediate effect in the Senate or they won't. And either way, I think they look ready to me to either send it along or quit trying or try something totally different. But I mean, in one way, shape, or form, that it's been sitting there for a while. I think they'll decide what to do with it yet this week. So stay tuned on that. We'll talk about it again on Thursday if we see any movement at all. There probably will be some Second Amendment style legislation that runs through, or guns, gun controls, restrictions, and things. Not exactly clear which ones they're going to start with, what direction they're going to go with those. There's already action yet this morning with the Capitol Committee in terms of like what can be brought into the Capitol. So I think things will start moving in that along those lines as well. Those aren't things that SBAM has an opinion on or has a position on. And then also, I think there'll be an effort, although it'll be difficult, to move an appropriations bill through the process, a supplemental appropriation to fund the rest of the incentives that are needed to bring that Ford deal, the battery plant for Ford in Marshall, Michigan. I think there'll be an effort this week to try to move that along, or to at least whip votes and see where they're at on appropriating an additional $750 million or so for that project. I think that the number that they're going for to get into the Economic Development Fund is another $800 million. The bulk of that being for the Marshall Ford project.
All right, and speaking of that project, the day after our last briefing, there were some more details released regarding that battery plant. So what do we know now?
Well, there were a lot of details that were shared, some kind of terms sheet in terms of what was expected for jobs. We saw some big, numbers in terms of like 2,500 jobs at that location, direct jobs, new Ford employees at the location. But in terms of what types of jobs, how much they would pay, that information really wasn't totally clear until Friday. And there was some pretty wide reporting on the details of that. Of 2,500 jobs, and it was a bit controversial because of the 2,500 jobs, 1,900 of them, 1,900 of them, about 3/4 are at $41,600. If you do the math on a full-time job, that means $20 an hour. And the reason that was a bit controversial is because at $41,000 a year, and then the average for all of the new jobs, some of them go higher, and some are a little bit higher, some are a lot higher, a few are a lot higher. The average is about $45,000, but in that county, in Calhoun County, where Battle Creek is, the average median household income is more like $53,000 or $54,000. So the idea of a big incentive package between cash incentives, buying the land and doing all the infrastructure work on the land for Ford, and then also tax breaks stretching out for about 15 years, it totals about $1.7 billion. And so the idea of that big of an incentive for jobs that average below the average, or that average below the median average household income in the county where it's to be located, I think it was a little bit of a surprise to people. So as they move through the legislative process this week, I think they will have some, they'll have some resistance to it. I mean, it was a big celebrated project. I think at the end of the day, they'll find a way to make all these pieces come together to get the project done. But I don't think it will be as easy of a process as what it may have seemed like based on the initial announcement and the excitement around that announcement.
All right, well, we'll certainly continue to keep everyone updated there. Brian, let's talk about the open or soon to be open U.S. Senate seat. We know that Senator Stabenow is not running for a re-election, and there has been a lot of chatter about who will and who won't run. So what do we know now about who's in and who's out?
Well, there's been a lot of action, especially in the last couple of days, like a bunch of things that have happened in the last couple of days. But just backing up a little bit, Senator Stabenow deciding to not run for re-election, just huge news in Michigan. She's been in office for a very long time, starting in the Ingham County Commission. Actually, I think she was on the Williamson City Council or something before that, then County Commission, and she was in the state legislature for several years. She was a member of Congress in the United States Senate. So she has had a career that has risen up to United States Senator, and is arguably one of the most influential senators. And so to decide to not run for re-election at a time when her influence is so high is, let's say, unusual. You know, it's for somebody to give up power at the height of their power. But I do think that there's a sense that for Democrats in particular, they've got a lot of young talent right now. And so the idea of stepping aside so somebody else can rise up at a time when there are a lot of kind of rising stars within the party, it makes sense. It's just conjecture on my part that would be part of the reason, but nevertheless, there were a lot of names that were floated, especially on the Democratic side, in terms of Alyssa Slotkin, a member of Congress, Mallory McMorrow, a state senator, Jocelyn Benson, Dana Nessel, Secretary of State and Attorney General, were all names. Garland Gilchrist, who's the lieutenant governor. But then what we started to see was people pulling their names out. And there are a couple of big ones just late last week and over the weekend that pulled out. Mallory McMorrow, State Senator Mallory McMorrow, said she is not going to be running for United States Senate. And then on Sunday, Lieutenant Governor Garland Gilchrist said he is not going to be running for U.S. Senate. And then Monday morning, lo and behold, Alyssa Slotkin, member of Congress, announced her candidacy for Senate. And so I think what's likely is that Gilchrist and McMorrow had a heads up that announcement was coming. They already knew, for whatever reason, they made their decision that they were not going to run, and they didn't want to be part of speculation, would be taking on Slotkin, and so they had taken their names out ahead of this announcement. Now, Alyssa Slotkin has been a very successful campaigner and fundraiser in the process. I'd looked up a couple of facts here just so you can get a sense. Running for Senate is extremely expensive, and maybe some of the others that were thinking of running looked at Alyssa Slotkin's campaign for Congress and thought, wow, she's really good at raising funds, and maybe wouldn't have wanted to take her on. Again, conjecture, but her campaign in between 2018 and 2022, so each of her elections during those years, total amount that was spent $19 million. I mean, that's for a member of Congress. And this was, it's a seat right now. It's based after the redistricting. It's a Lansing-based seat, but this one has stretched from Ingham County to Oakland County. So this is a swing seat, one of the seats in Congress that everybody was watching, and one of the highest spending seats in the whole country. And if you're to look just at the 22 election, it was $8.6 million. So clearly Congresswoman Slotkin has the wherewithal to raise money to mount a serious campaign for United States Senate. The other name on that side of the aisle that I've seen at least not rule it out and publicly indicate that she's thinking of it is Jocelyn Benson, who is the Secretary of State. So Jocelyn Benson also has proven the ability to raise funds in the past, although that race hasn't been, the Secretary of State race hasn't been a target race like the congressional race that we just discussed for Alyssa Slotkin. So those appear at the moment to be the most likely candidates. Benson, maybe, Slotkin, definitely in the race as of this morning.
All right, and we all know this is definitely not a one-sided race. So what's the news from the other side of the ticket?
Yeah. Oh, so with Republicans, it's a much less clear scenario on the Republican side. So there is one candidate that has announced. Her name is Nikki Snyder. She is on the State Board of Education. So there's a board that is elected to essentially govern, supervise, pick the state superintendent, the Department of Education. So it's within the Department of Education. These are statewide elected positions. There are 8 of them. One of them is Nikki Snyder. And so Nikki had announced that she is going to run last week or the week before. I think it's likely that given the condition of the party, the Michigan Republican Party right now, which is the ability to raise money has been diminished like a lot. They picked new leadership a few weeks ago, and there's not really any reason to believe that the party is going to be able to put together any kind of serious resources in the next election cycle to be of any help to any Republican candidate. Now, they'll have a grassroots operation, and that'll provide some, presumably some kind of benefit to candidates on that side of the aisle. But in terms of fundraising, not so much. And so what that tells me is that there's a higher likelihood that somebody that has the ability to either raise a lot of money on their own without the assistance of a political party, or somebody who can self-fund would be the most likely folks to come out of a Republican primary. So out there in kind of rumor mill land, there's a few names that have surfaced. Peter Meyer, who was a member of Congress in what was the 3rd congressional district in West Michigan until this last election, is one. He had lost it in a primary to a candidate endorsed by former President Trump, and so Peter Meyer is somebody that when asked about it, said he was thinking about it. And then Sandy Pensler, who's somebody who had run for this seat in the past, ran against, wanted to be the Republican nominee a few years ago when Debbie Stabenow was up for re-election, and came in second to John James during that year. So I think Pensler, Meyer are 2 names to keep an eye on, and then there's Nikki Snyder already in the race on the Republican side. So lots more to come on that. This United States Senate seats do not just come up for in terms of open seats very often where there's no incumbent running. This is something that happens very rarely in Michigan, especially, that is known to have very long-term or long-standing senators. So I think at the end of the day, it'll be a marquee race. It'll be one that will attract a handful of top-tier candidates, and we'll be off to the races.
All right, now it is time for our Data Monday report.
All right, I'm going to share my screen here and focus in the beginning of the presentation on some housing issues, or to really look at these changes in the housing market that are pretty indicative of what's been happening out there with respect to Federal Reserve actions to try to cool off inflation. And you see it in the housing market pretty quickly. And it is showing up in very direct and obvious ways. So I just wanted to start with a few slides there. These are existing home sales. So not new homes, not new construction, but existing home sales. You look at the median price, you'll see that that it's come down quite a bit. Now, this 1.3 means it's 1.3% higher than the prices a year before. That's what this looks like. So it's not that the price itself has plummeted compared to last year, but it's just barely going up for existing homes. Now, in looking at the at new home sales, this one, this is just such an ugly slide because new home sales are very, very sensitive to what's happening in the economy and what's happening in with interest rates. And so you see it jumps up and down in a very short period of time. And so you see these are actually down. So the median price of a new home is down. The existing homes about level from a year ago, and new homes down 8.2. Looking at the month's supply of homes, and this is where the higher this is, the worse the economy generally. So in other words, back here during the Great Recession, when you had 12 months worth of supply of homes on the market, that meant that homes were for sale for a year before they actually sold. Now it's 2.9, so that's still historically pretty low, but higher than before. So you see the number of homes on the market today are higher than they were not too long ago. So people are still being patient. Homes are still selling, but where you see this really show up in a pronounced decline is just the number of homes sold. Before we talk about the price of the homes and the number of houses on the market, but there was this phenomenon when the prices went really high where people were selling their homes because the price was high. You know, normal times people just sell homes when they're going to move, or they need to expand, or they need a different home for some reason. There's a lot of life reasons why somebody needs to buy a new home. And we had a lot of home sales in the last few years that came about because prices were high. So the number of existing homes that have sold is way down. And then also condos, existing condominium sales down even more. So that's the number, not the price, but the number of homes that was sold. Now looking at inflation, we talked a little bit about this. So the blue is the top line, and then the orange is that more core. This orange one is the one that the Federal Reserve traditionally looks at most closely. And so you see, you know, because this is a long-term slide going back 40 years, it's hard to notice, but you know, had a little uptick right in both of these numbers, this blue and the orange, a little bit of an uptick in the numbers. We also saw the fourth quarter GDP continue or kind of confirm the downward trend. And we're looking at two things here. In the blue, we're seeing what we call the nominal GDP growth. So this is before inflation. And you'll see that was quite high in the past, and it's come down now to 7.4 before inflation. When you consider inflation though, 0.9. So orange is after inflation, GDP growth after inflation. So we call that real growth. Nominal is without inflation, real growth is with inflation considered factored in. And as you can see, just barely positive. So a lot of these are just kind of hints that that things are softening, just like we've been saying, that while there aren't a lot of signs that it looks like that things are poised to crater, or this is poised to look anything like it did in the Great Recession before, definitely heading into softer times. And then I thought this was just kind of interesting to show because it had gotten so high before the Shanghai to Los Angeles container freight, it's a benchmark. So there's 40-foot freight boxes that you see on these big ships that go across oceans from China to LA. And those had gotten up to $12,000 to ship them. Now they're back down in the normal-ish range of 2,000. That's a little bit higher than it had been, say, over the last 5 years before the pandemic, but looks pretty normal. But I bring this out because it looks like it's leveled off. It was coming way down, and it kind of has leveled off now for a few months. So pretty good indication that the international shipping is kind of returning to normal. So one little piece of something that looks pretty normal, but clearly inflation is stubborn, especially that core inflation, and the numbers ticking up in the last month. And then looking at home sales, that's what you would expect to see. And looking, there are a bunch of other sets of data, and I don't want to bore everybody with just slide after slide after slide, but we'll look next week, I think, at some personal income numbers as well, so we can look at how nominal growth compared to real growth, and also we're seeing savings rates go up a little bit. And while it sounds good, like savings rates going up in America, that's good because we don't have a great history of saving for the future. But it also can be an indication, or traditionally is viewed as an indication, that people feel the economy softening, and so they're trying to save a little bit of money to prepare for harder times in the future. So the inflation numbers were disappointing. The housing reports look pretty much like you would expect them to look right now, and we'll keep a close eye on that. And as always, on Mondays, you'll get a Data Monday report to see the latest and the greatest what's happening in our economy.
All right. Well, thanks, Brian. Thank you all for tuning in today. Thank you to our sponsor, Consumers Credit Union. And we will be back here with more updates Thursday at 3 p.m. Have a great week.
Hey, thanks, everybody. I'll see you on Thursday.